This was a miss based on China tourists both in Hong Kong and US, is that right?
Yeah, it is. And, it's a great day to be on the bull side of this debate. So I think what we have to think about is what changed, right? Let's own, I have to own this. Think about what changed today versus yesterday. And you have the stock price that changed, and you have this tourism piece that changed. And you guys were talking earlier about the cost input side of the tariff. That's been one piece of the fear. Unfortunately, the other piece of the fear that really brought about mass multiple contraction across retail was what happens to that tourist. So that was a fear that really couldn't be dispelled until next year. And I would argue most retailers that had yet to report were going to be asymmetrically skewed to the downside. The problem was Tiffany actually told you that tourism was a concern. So we can't get away from that. The point here is that worth the deceleration in the stock? I think that's overdone.
Jan, taking the other side?
Yeah, you know, Simeon, you didn't tell me you were going to be on the set. My favorite analyst I got to go up against. But I am not a fan of Tiffany. I wasn't a fan of Tiffany coming into the print, and I'm not 12% more happy with them after the print. So no, I don't like them here. I didn't like them before, and I don't like them for a very fundamental reason. I think the upper end could very likely struggle in 2019 in any event, because we're going to see the bi-coastal, blue state, affluent consumer take a big hit on their taxes due to SALT. And we're also going to see the business probably not be quite as strong in general in 2019. And here we're seeing the Chinese consumer slow down. This is not temporary. The Chinese consumer is going to be slow because the currency's struggling. It's going to continue to struggle. And if the tariffs go on, it's going to struggle more. So I don't see that happening. And so while I like Reed Krakoff's work on the paper flowers, I think it's hard to replicate. And while I like the fact they've got a good local consumer, I think that the international consumer, especially the Chinese consumer, is going to be a big problem. So I see that being a problem right through 2019. I don't see this getting better for Tiffany. There's too many negatives running through the numbers.
Jan, for all of consumer discretionary, therefore, or just Tiffany?
No, just the high end, and I think the rest of consumer discretionary is going to be really good in 2019. I think the high end that's especially reliant on an aspirational, not yet rich, but high income consumer like Tiffany is going to struggle, because I think this SALT really makes a difference in 2019, Q1 and Q2, and you know, who knows what happens in Q3 and Q4, but I think it's a real struggle for the next 9 months.
I mean,
so
I guess,
what's interesting,
Simeon, oh, go ahead. Take the other side. And also talk about some of the moves this company has been making. They hired Reed Krakoff. I mean, they have a totally new design collection and new cool commercials and a cafe, and how they're going to fight the macro.
Right, so what I was going to say, and to kind of continue this being the nicest, most love-filled debate of all time, I try not to, Jan and I tend to agree. I agree with a lot of what he said, and he mentioned 9 months, and I think duration is really important here. I think the reality is owning anything in retail for the next month is going to be very difficult, and any catalyst for the next month is going to be very difficult. And I agree with the sales. What's interesting here is the changes the company has made, Sarah, to your point. And the way we look at this company, you've had an asset that's been somewhat inefficiently run for so long and didn't adapt, didn't evolve with retail. And what you're seeing is very quietly changing the way they store their stores, changing how they approach and market to their consumer, looking at their supply chain a little bit differently, and then doing things as simple as tax and financial cubes. So this is actually the way we're viewing this, down 12%, is much more of an operational opportunity, so a little bit sales independent, where you just have company-specific levers at your disposal, and that makes it interesting.